This is Rajkumar Baheti. Good evening, everyone. Thank you all for joining the first quarter results conference call. I'm sure you would have received the results by now. However, let me briefly take you through the numbers for the quarter ended 30th June 2020. So last year we had closed the year with a strong note, and we are continuing the same journey nicely. First quarter this year has also been a good beginning for us. During the quarter, our total revenue grew 41% to 1,341 crores. EBITDA grew 108% to rupees 416 crores. EBITDA is 31% of sales. Profit before tax went up by 131% to 368 crores, and profit after tax went up by 144% to 301 crores. EPS for the quarter is rupees 15.99 per share. This is for the quarter versus 6.56 in the corresponding quarter last year. Capex for the quarter is 142 crores. Cumulative capex for ongoing projects, including under CWIP and including pre-operative, of course, is rupees 1,511 crores. Investments in our joint venture JV, Pharmaceuticals Ltd, is 702 crores. This is cumulative investment number. The gross borrowing at consolidated level is rupees 1,439 crores, and this is down from about 1,700 crore last March. The company has 260 crores as cash in hand, so the net borrowing is about 1179 crores. Net debt equity is 0.33. I would like now to discuss with you the presentation on international business. Over to you, Pranav.
Thank you, Mr. Baheti. As you know, it was a good quarter for the international business, and this was driven across all these segments. The first question on everyone's mind is the sartans opportunity and what is happening in the market. So as I said in the last call, the sartans market seems to have stabilized. There have been newer entrants. By and large, this is a basket of about 14 odd products in the market. We continue to hold share in some products. Some products is where there have been competitors. What is interesting though is no one competitor is taking up so much major market share or is present across the sartans. So I think the market is quite stable. As regards the US outlook, I continue with the same what I said last quarter. We stick by the 70 million plus minus kind of a number. That's what we're consistently seeing as our base business. As we go along, we'll keep adding stacks on top of it. This quarter was an exceptional quarter for the Europe and ROW business as well, because as you know, the last 2 years has been a little slow. We had a lot of serialization issues, and this quarter we managed to get a lot more throughput out of our plants and could supply that grew well. API business also had a very good quarter. Some of it was due to some of the China disruptions where we could capture some API opportunities. However, we expect growth in the API to continue for subsequent quarters as well. R&D expense was 143 crores in the quarter, which is approximately 11% of sales. This was a little lower due to shutdowns. However, during the course of the year, we go back up to where we've been. We filed 8 ANDAs during the quarter. We also received 6 approvals in the quarter, and we cumulatively have 125 ANDA approvals. We launched 3 products during the quarter in the US, and we will launch about 5 in the second quarter. As I mentioned, coming to the financials, international formulations grew by 70% to 771 crores for the quarter. US generics grew 73% to 596 crores for the quarter. Having said that, Q1 last year was a relatively weaker quarter in the US. Ex-US also we grew 62% to 175 crores for the quarter. This, I mentioned, was due to the serialization issues in the past. And the API grew by 54% to 264 crores for the quarter. I'll hand over to Shaunak to give a brief on the domestic business.
Yeah, good afternoon, everyone. For Q1, the India business, the numbers that we circulated, we grew at a negative 6%. This was in line with IMS industry numbers as well as, so that was in line with industry. I think we saw severe challenges in the month of Q1, especially in April, May and parts of June due to the strict lockdowns throughout the country. In terms of the impact on business, we saw a pickup in June, and if I were to take the first 20 days of July, we are seeing a pickup of the business. Despite all of this, I think at an overall portfolio level, there's been a drag into specific areas. Those specific areas are the liquid formulations, which largely go into the pediatric usages, whether it's antibiotics and cough and cold, which are large dependent areas for us. We've seen a severe drag and it's reflected. Those same drags are being reflected for the industry in strict liquids in IMS data. Also, partly there's been some drag in the hormone part of the gynecology portfolio. Largely, we feel these are two very specific drags in the portfolio driven more by market dynamics today in this period of COVID. Other than that, I think the expenses in Q1 were managed to ensure that profitability stays in line with budget. So we have taken those steps, and in Q2 we expect, to make sure that top line again starts to grow, and we have mentioned cost cutting and management of middle lines has happened in Q1. I think two other areas in Q1, there have been no special discounts and special trade schemes being given to the market to ensure pipeline billing. We have made sure that despite a lot of pressure from the trade as well as our competition resorting to putting these pressures in, we spent the last 12 months as previously communicated to clean up trade discounts, trade practices, and to ensure that we largely became steer prescription-driven focused company, and that should only drive our sales. So we feel that it wasn't right for us after 4 quarters of this to restart it, and we have resisted and we will continue to resist on this. In terms of the overall business impact of the restructuring, the cost correction interventions we took last year, we feel if I look at a mix of Q4 performance and parts of June and July that we're seeing, I feel part of the correction has happened and is reflecting our portfolio. Going forward, we feel that the portfolio will outperform the represented market, and going forward, as long as despite the big drag on our liquids portfolio, which historically is a portfolio that always does well for us, and I think for many quarters going back, I think the liquids portfolio has always outperformed the market. If we see some tailwinds on that part of the portfolio, we see substantial acceleration to happen. Thank you. I open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vishal Biraia from Aviva Insurance. Please go ahead.
Hi, congratulations on a great set of numbers. So, a few questions. So what this overhead expenses that where we've seen a sharp decline, 13% quarter on quarter and 5% YOY. So what proportion of this is sustainable?
So there are major two heads of expenses which got reduced. One, as Shaunak mentioned, our field expenses, including the traveling, some promo expenses got reduced. That's more because of this field people not able to travel frequently and freely to their customers. And accordingly, the promo also got impacted a bit, or I would say deferred a bit. And the second is our R&D expenses also were down, which are like clubbed under various heads of expenses. The total aggregate of R&D is given at the bottom of the results. and that also was a little lower because of impact of lockdowns, etc. At least in, I would say, end of March, beginning of April. Other expenses are online.
Okay. And just one question on the API business. What led to the substantial growth in API business?
Sorry.
API growth.
API, as I mentioned, the API business has been doing well. We've been seeding samples. We saw some opportunities because of azithromycin. That was one of the molecules that was used to treat COVID. So we had some interest in azithromycin, whereas the rest of it was just BD and opportunities that we had. That's how we grew the API business.
Okay. And this trajectory should continue for the rest of the year for API?
I think, yeah, API we will continue. Not at maybe such a high growth, but we will continue growing in subsequent quarters as well.
And for the US business, we had initially planned prior to the start of the year that we will be launching about 10 products. We've launched 3 products in 1 Q. So are we on track to launch the balance 7 in 2 Q?
So actually, US will launch more than 10. We'll launch anywhere between 15 to 20 products in the US.
That is for the year you are saying?
For the year, yeah.
Okay. Fair enough. Thank you very much. I'll come back to you.
Thank you. The next question is from the line of Anmol G from GM Financial. Please go ahead.
Yeah, hi. Thanks for taking my question. Congratulations for a great set of numbers. My first question is to Pranav. Pranav, some of the industry is talking about softening of price. Yeah.
So sorry to interrupt, but your voice is breaking up. Can you move to a better reception area, please?
Yeah. Yeah, hi. Is this better?
Yes, sir.
Hi, Pranav. My question is related to some industry commentary which has been emanating that certain API pricing has been softening. Typically, this is a lead indicator for these formulations also. So are you seeing anything with respect to market vis-a-vis the last time you spoke on the call, which kind of makes our portfolio more vulnerable to any potential pricing shock in the next 2 to 3 quarters?
So we have to look at it. I haven't actually seen the API pricing because we're not such a big API player. However, people are still looking for good API sources, and that's one of the things that will be there with the disruptions coming in from China. So that's one aspect of it. Second aspect is, I think, yes, the competition has increased in the US in sartans. However, it's such a complex and such high volume products. There's no one person who's taking very large shares. So I don't think it's reflecting in, I think people are not, at least from what it seems, they're not killing themselves over market share to go to the high levels that were prevalent in the past. So I expect it to be stable as of now.
Yeah. So a follow-up on that. So for example, last couple of quarters, our US performance has really surprised on the upside. Do you think there is a greater case for incremental investments in the US given how the overall market is shaping up? Any headline thoughts on that would be helpful.
Yeah, so I think the US market, I'm seeing the competitive intensity come down a little bit. I still think it's a very attractive market. There's a lot of demand there. I believe I am still bullish about it, and we are continuing to invest in that market.
And my second question is to Shaunak. Shaunak, I take your point that, liquids, we did have, a fairly high amount of leverage from a portfolio perspective, but we also had offsets by the way of azithromycin, etc. So if you could just share some color in terms of, how we got impacted during the quarter and what the road to normalcy or, a new normal is looking like. So, for example, how was June like and how far are we from pre-COVID levels? And therefore, are we still on a full year basis in a position to take advantage of some of the initiatives that you took to, take the domestic business to a structurally higher growth path?
Yeah. So I'll answer your questions 2 ways. I think if I look at Q1 azithromycin, I don't think we had an overall azithromycin benefit for Q1 if I take in terms of absolute growth numbers versus last financial year. So that's one. The second part too, like I said, if I were to take the end of June and the first 20 days of July, keeping in mind that market has reached some amount of normalcy, we have seen with a good onset of monsoon the pickup in azithromycin solids only. Azithromycin liquids, as I mentioned, all liquid formulations are a drag at the moment. We have seen a substantial drag in the liquid part of azithromycin, though going forward, we see a very strong uptake in azithromycin oral solids. So that's in the India business. Now, in terms of coming to impact of some of the interventions we've taken, my gut call is that we are seeing a lot of that benefit already flowing through to us, and it will start flowing more strongly in Q2. If I can look at the major drags in the portfolio, like I said, are liquids. And liquids is one segment where historically we've always been able to outperform or perform in line with the markets, whether it's the antibiotics part of the liquids or it's the cough and cold part of the liquids. We've always done well, and IMS has a true reflection of that. I think in terms of normalcy, I feel despite and with the ongoing lockdowns that are happening, that will keep impacting the business, but not in a major way as long as these lockdowns aren't for a long enough period. So that's one part of it. Second part of it is to do with customer behavior. I mean, like I mentioned, we saw some parts of the portfolio, whether it's the hormone part of the gynecology portfolio, which is linked to pregnancy, or it's the pediatric part of the portfolio. I think some of these patient populations are staying away from the clinics in, maintaining a more higher level of, protection for those patient populations. So, I mean, unless that dynamic changes back to normalcy, we don't see it. I think, like I said, the GP side of the portfolio, we see some return to normalcy. And I think the balance part of the portfolio continues. So I think if I could just give an idea, I know it's too little and it's too early, I think the IMS reflections for the month of June, which usually, are a precursor to the subsequent months, I think the industry grew at, it was a 5% market growth, whereas Alembic showed about an 8% market growth for the month. And we expect this trend to go forward as long as, we don't go back into any kind of major pan-India lockdown this or the few coming months.
Thank you. Thanks, Shaunak, for that. I have more questions. I'll get back in the queue.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi, thanks, and congratulations on good numbers. So first question is on gross margin. So just wanted to clarify that, it's largely due to the lower India and higher API and ROW sales, or the US profitability on the gross margin side would also be little lower than in the past few quarters?
So, no, your first part of the observation is right, Prakash. The lower gross margin, lower as compared to the March number, is because of a higher proportion of API sales.
Okay. And we have said that API will continue to be a higher growth element going forward.
As a percentage of sales, I don't know. As a contributor to the sales, the percentage, I don't know whether it will be the same percent or it will go down a bit.
Understood. Fair enough. And secondly, question to Pranav. So you mentioned about 70 million plus minus. I'm just trying to understand with comment that sartan opportunity being largely stable, and with 10 to 15 or 15 to 20 launches plus the azithromycin scale up, won't we go and do a step function of another $10-20 million going forward by 3Q, 4Q? Would not that be a correct assumption?
So the 70 million is what I said a few quarters back that what I anticipate. As for the new launches, the whole point is as you have more launches, you should see that going up. Azithromycin has not been a big launch for us. There's a lot of incumbents in the market already. That's stabilized. So azithromycin, you didn't even have all the strengths initially. So that's not been such a big product for us. But overall, we should continue to grow on that. So let's see how the launches go. I'm not committing anything because we don't give a guidance. Depends how successful the new launches are.
Okay. And lastly, on the presentation, we talked about 10 derma products and 12 ophthalmic approvals.
Yeah.
I wanted to check how has been, what portions have been launched and how has been the initial launches, since these are the new category of product launches for us.
So, Vitan, should just tell you how many have been launched. But ophthalmic's been very good. I think it's a good market, of course, much smaller, but that's done quite well. Derm, we're starting off real slowly. I think we've launched about 4-5 products. and we're gradually ramping that up. As you know, we never get in with big market share on day one, so we'll slowly see how the situation is. Derm is a little more competitive compared to the ophthalmic. Ophthalmic, we picked up some good share in some products.
Perfect. And last one, if I may, on the fundraise, so the understanding is, we did a fair amount of capex in the new facilities. All are, heavily or fairly invested now. So the next round of investments would be looking for the US scale up into other categories where there are gaps, and if yes, which are those areas we are looking at?
Yeah, so I think one of the reasons for the scale up for the funding is, I think we've demonstrated what we've done in the US, and I think we continue to remain bullish in the US. There's a lot of opportunities. With our capex largely paid off through internal accruals. Now it's a matter of next couple of years, we know where the growth is going to come from, right? But what do we do after that? So we have to start working on some longer gestation projects. These are not inherently more expensive, but just a little more risky in terms of little longer lead times. So we're just building up a firepower for that and just getting lighter on our balance sheet, which would help us invest in these areas. We haven't disclosed the areas, but it'll be a little more complex generics, a little more 505(b)(2) kind of products.
Okay. And biosimilars, if you may just clarify that?
No biosimilars.
Complex generics and 505(b)(2).
Yeah, so going up the injectables route and some other specialty.
Okay, thanks. I'll join back with you. All the best.
Thank you. The next question is from the line of Kunal Mehta from Alembic Capital. Please go ahead.
So thank you for the opportunity, and sorry to harp back on the Sartan's question. So firstly, I would like to congratulate the management because our performance in Sartan's was because we had planned in increasing the API capacity, which I think nobody in the industry did at that time when we did, and which is paid handsomely. So when I look at the IQVIA numbers, around Sartan's portfolio as a whole is around roughly 40% of our running 12-month sales. And now we are now seeing more players coming in. So my question is to Pranav, given I wanted to understand the worst case, given how much market share can we lose in these products, because it's spread across 13 products and they are fairly large volumes. So would you give us a sense of how you see the price versus market share equation going forward there?
Okay, so I can't give you product-wise specifics, but if you have IQVIA data, you just take a look at all the Sartans, and inevitably what you'll find is there's about anywhere between 3 to 5 people who are dominant in all the Sartan salts, right? And you'll see where Alembic is and where we aren't. Number two, strategically, and in respect of Sartans, our strategy is we want to make more money for the company. So we don't chase market share, we chase where we can make more money. That's the strategic direction that the US team and Alembic does. So that's the second thing. Third is, as I said, people are getting into Sartans in various sorts. So not everyone is able to do all the products. So it's very tough to say how it goes. Right now we're holding on to market share. It's our market share to lose, and depends at which price. So far, I think, as I mentioned earlier also, that the competitive intensity has come down. I think the market is well settled right now.
So the key barrier here for anyone to build a share in a high, assuming in a high volume product like Valsartan or maybe Valsartan plus HCTZ. So would API quantity be a key barrier for somebody to take share from us, or how?
I think again with all business in the US, there's various constraints, right? So it's very tough to answer. It's not particular to Sartan. You've got API, you've got compliance at API, you've got formulation, you've got compliance at formulation, you've got your supply chain efficiency, everything. So it's a combination, and not Sartan, just for every product, it's the same.
Sure. The second question I have is on the longer term filings. I mean, you mentioned, product launches. So you mentioned that this year we would do more than 10 plus launches as compared to what we had guided earlier. And I'm sure next year, given the para fours have been lined up and there are good opportunities, I'm sure you would repeat the same thing going forward. But once from FY22 second half, where you have most of the capacities coming on stream regarding the new investments in different dosage forms. So I wanted to understand from FY23 onwards, how do you see the launch scenarios? I mean, do you see at least 20+ launches every year, given orals, given it's a combination of oral solids plus onco plus injectables plus opthal?
So, so actually we've always said that we will launch about 15 to 20 products every year. And we stick to that because a lot of the filings that we're saying is part of these new therapies, and that's what I'm saying. So I think 15 to 20 launches per year is what we're looking at for the next few years.
And so just as a follow-up on the, can you just let us know the situation on exhibit batches from each of those plants, where we are in terms of, any indication on that would be very helpful.
I'll give an update on the plant. So F1 is a formulation plant, which is a current commercialized plant. F2 is the oncology plant, which is OSD and injectables. OSD has already got filed and audited twice. In injectables, the batches are ongoing, so I think we'll file in 6 months or so. F3 is injectables. We've already filed 3 or 4 products. F4 is an extension of F1 or its OSD plant, where we'll file the batches in the next 6 months.
So any growth from Gujarat will be an extension. Gujarat plant F4 will be an extension of the original formulation plant. So that will be.
It's not extension. What I mean is it's a similar as F1. It's a separate site, and actually we already filed. So it's just a matter of triggering the audit.
Understood, sir. Understood. Thank you very much, sir. That's it from my side. Thank you.
Thank you. The next question is from the line of Swechha Jain from ANS Wealth. Please go ahead.
Hi, sir. Thank you for giving this opportunity. So I just wanted to know if you can provide some updates regarding your biocenter in Vadodara, like what kind of activities are happening and what are our plans with respect to this?
So it's a biocenter, is a regular biocenter what all pharma companies have. We conduct bioequivalent studies, so you compare the innovator product with a generic. It's a 90-bed facility.
Okay. But we don't have any plans of getting into biosimilars, right?
No, zero biosimilars. We have no biosimilars, and we're not intending on getting into biosimilars.
Okay. So my second question is, while we've seen, a good growth in API in this quarter, but if I look at the overall CAGR of last 4 years, it's just been 3% as compared to, other US and ex-US growth in generics. So if you could just throw some light as to, what is our strategy with respect to API overall? And we are also looking at capacity expansion in API. So what kind of capex are we looking for next 1 year or 2 years?
So API hasn't been a focus area for us for the last 3-4 years. We've been more focused on the formulations. Hence, we don't supply all API to all over the world. For example, if it's a new innovative API that we're going to use for a para 4 filing, we will not offer to a competitor in the US. So that's one aspect of it. Number 2, the API sales for us are a little lumpy some years because we do some contract manufacturing for a multinational. When that happens, it gets very lumpy. That's one of the reasons. If you take X of that, the business has grown pretty well. I would say, I don't have the figure, but must be at least 15% CAGR over the last 4 years. So it's going well. The business is doing well.
Okay. Thank you, sir. So I have a few more questions. I'll join the queue.
Sure. Thanks.
Thank you. The next question is from the line of Ashit Panjwani from AP Securities. Please go ahead.
Hi. Congratulations on a great set of numbers. I've got 2 questions. One on the India growth. So what's our estimate in terms of what would make us happy when we close out the current year in terms of at what growth rates are we looking? That's one. And second is, I have a question from Mr. Mehti to understand what are our capex plans for this year and next year.
Yeah, I think the India business, it's very hard for me to predict how COVID is going to play out. I think, I think there's been, it would be only a guess. I think going forward, as long as we outgrow the market, and when I mean outgrow the market, I think even in a negative market, if I can gain market share, I think we'll be very happy if that happens. But like I said, it's very hard to predict because if I see what's happening today, there's no pan-India clarity that I'm getting because states are going into lockdowns on different periods, which is again affecting it. Bombay versus, Indore versus Calcutta versus Patna, I think the dynamics are so different in terms of what's happening. So it's hard for me to really make a composite guess on that. But yeah, I mean, that's I'd just be jumping, I guess, so on the India business. But like I said, growing faster than market in all our represented portfolios is what the objective is this year.
Taking your next part of the question on investments, I think we are already on record saying that our maintenance capex is around 300 odd crores a year. We will also have about 350 odd crore rupees as pre-op expenses across all our facilities. That apart, I think in next year and a half, 2 years, we plan to spend about 600-700 crore rupees on expanding our injectable facility as well as our Jaro, the F4, the new OSD facility, because we will have to put up additional manufacturing blocks or additional lines. And then we have some investments planned for API. So API, we were not, I mean, there was an earlier question also, we were not able to make a lot of investments in API, partly because of our focus on formulation, partly also because there were the route or the environment for getting expansion in API facilities was pretty longish. Now government is relaxing that. We are also getting some approvals for expansion. So we'll spend some money on API.
Thank you very much.
Thank you. The next question is from the line of Damayanti Kerai from HSBC Securities. Please go ahead.
Hi, good evening. Thank you for the opportunity. Sir, can you split this pre-op expense between FY21 and 23 in operating expenses and below EBITDA items, maybe year-wise? That will be helpful.
So these 350 crore which I'm talking of is all operating expenses across all facilities, all new facilities.
Okay, and this is over next 2 years, right?
This is per year.
Okay, per year. Okay, and one question on like other international business. So you mentioned we are done with realization and all. So should we be taking this quarter performance as the base going ahead?
Yeah, you can take that.
Okay. And my last question will be on the operating expense. So obviously this quarter we had some cost savings, which is reflected in the numbers. But I think Baheti sir mentioned we should be seeing the normalization. So this 320 crore kind of expense in the quarter, should it go back to 360, 370 crore expense, which we had seen in the previous quarter? Or how should we look at the operating expense trend?
So, I mean, I think we are not in a commodity business, so giving this number for each line item is difficult. I'm just giving you an example of R&D. R&D cost can be high in a particular period and then can be lower in the next period. It depends on variety of factors of how the programs move, how the clinicals are done, and how imported samples are received and booked. So, but more or less, I think the numbers would be, I mean, if you take the whole year, the numbers would be 1,400 crores or so.
Okay. Okay, sir. Thank you.
Thank you. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity and congratulations on a wonderful set of numbers. Before I missed this figure of R&D, in the previous call, Pranav had mentioned that compared to about 650 crores of R&D in FY20, this year we were looking at around that figure to be around 700 crores. And you already mentioned that quarter one, the figure was lower because of the lockdown. So how do we see this R&D expense for the full year?
So we believe that we should be around 700 crore plus minus for the whole year.
Sure. And sir, with regards to the Indian business, could you share some details about product launches which you have done in the last 2-3 quarters, and how do we look at some of the major product launches in next 1 or 2 years to come?
Yeah, so I think last 2-3 quarters, I think the only 2-3 big products we've launched is I mean, last 2 quarters, I think, last quarter there were no launches because keeping the lockdown in mind. I think prior to that, we are launching along with the industry. So we've launched, Vildagliptin, Ticagrelor, have been two important launches. I think going forward, I think as and when any drug that goes off patent, and we're expecting in the next 2 to 3 years, multiple DPP-4 inhibitors to be going off patent, I think we will launch on the day of expiry for those products.
Sure. Thank you. That's it from my side. Thank you.
Thank you. The next question is from the line of Sameer Deshpande from Fairdeal Investments. Please go ahead.
Hello, sir. Congratulations for the excellent set of numbers. The growth in sales and profits is excellent. We have invested in various plants which are at the various stages of completion. And you have mentioned that they will be over next 1 year or so they will be completed. So actually, we have a debt of about 1,400 odd crores you mentioned, and the net debt of 1,200. So actually, what are the plans for the reduction of the debt?
So, in a normal course, our cash flow would have repaid the debt over a period of time. But as I mentioned a moment back, that we are also looking at some more capexes. There is also a plan to do a QIP for the company. Just about an hour and a half back, we had an AGM where these resolutions were put to vote. We are still expecting the resolution, but we don't expect any problem in getting the resolutions passed. Post that, I think the investment bankers and the councils will do their work and then we'll decide the timelines. So the QIP also will be used to augment further capacity, further capexes as well as for repayment of debt.
Achha. And the interest cost, what is approximate? Because we have working capital debt as well as the debt for the plants, that is capex. So what is the breakup currently for the debt and what's the interest cost approximately?
So the interest cost on working capital, you would see that is hitting my P&L. So whatever interest cost you see is in P&L is on working capital, and the rest of the interest is capitalized to the assets of CWIP.
Acha. And so what is the rate of interest approximately on our debt currently?
Yeah, different rates. I think it varies from 8.5-9% on long-term debt to about 4%, which we are currently borrowing on short-term debt. It's as low as 4%.
Okay. So we have all the rupee loans. We don't have any forex loans.
We have some ECB also. Out of the long-term loans, we have some ECB also. Look at the balance sheet now. Look at March 20 balance sheet, the annual report. All the details are there.
Yeah. Yes. Okay. All the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Charulata Gaetani from Dalal & Broacha. Please go ahead.
Yeah, my first question pertains to India. With more than 1/3 of our portfolio being in specialty, don't you see growth coming ahead? Because in the chronic portfolios, during the lockdown there has been some stocking, but now it is expected to revive.
Madam, first of all, our specialty is not now 1/3, it is actually 2/3 of the business for the domestic business.
60 plus.
Yeah, so 60 plus or so. So I think Shaunak has said a couple of times in this call itself that we hope that we will outperform the market, will outperform the RPM.
Okay. Second, my question pertains to API. What is the contribution that you expect from API for the full year?
So API is typically 15% of our business. We expect it to stay in that range, plus minus couple of points.
Okay. And third, in terms of US, the growth in US, how much is the contribution of azithromycin Because there have been steep shortages for quite some time.
We don't give product-wise contribution. That's something that we don't disclose.
But would it be a major component?
For the U.S. business, no. Because as I said earlier, someone asked, so we didn't have all the strengths and it's already quite competitive, so we didn't do much on azithromycin.
Okay. Thanks.
Thank you. The next question is from the line of Vishal Manchanda from Nirmal Bang. Please go ahead.
Yeah. Thanks for the opportunity. In the U.S., has Febuxostat commoditized or it is still a meaningful product for you?
So after the last quarter, it was, I think there's still only 4 people in the market. However, I think we've lost some share and someone has dropped prices or there's been additional competition. So it's got a little commoditized.
So we would have seen some impact in the current quarter or we would see it subsequently?
I think subsequently you see.
Okay. And on the API side, was there a lumpy element on account of CRAMS this quarter, this specific?
No, so there was zero CRAMS revenue. Actually, for the last 3-4 quarters, there hasn't been any CRAMS revenue.
So any color that you can share in terms of any specific API that contributed to the bulk of growth or it was spread across APIs?
Spread across APIs. We don't give it, but as I said in my opening statement, azithromycin is one where we sold some API. We are actually the largest manufacturer of azithromycin in India. So that is one API that we did sell some of.
Okay. And can we expect similar number to happen in the subsequent quarters? Or so like this quarter it was 20% of sales. So would that number sustain as a percentage of sales?
API will grow this year. As a total percentage of sales, I don't want to give a breakup because it depends on the other parts. But API as a business will grow about 15 to 20% this year.
Okay. Thank you. That's all from me.
Thank you. The next question is from the line of Harish Kumar Gupta. Please go. An individual investor. Please go ahead.
Hello, sir. I have one question. What is the current capacity?
Mr. Gupta, your line is in talk mode. Kindly go ahead with your question.
Hello.
Yes, sir. Please go ahead with your question.
Yeah. What is the on an average capacity utilization right now?
We don't look at capacity. See, for API plant, all of our plants are multi-purpose plant. So for every product, capacity can be defined separately. So we look at our business model. Capacity utilization is not a big issue for us.
Okay. Thank you.
Thank you. The next question is from the line of A.M. Lodha from Sanmati Consultant. Please go ahead.
Hello.
Yes, sir. Please go ahead with your question.
Hello.
As we are facing issues with the current participant, we move to the next question from the line of Vishal Viraya from Aviva Insurance. Please go ahead.
Thank you. Any plans to expand the sales force in the US and ROW markets in the near term?
First of all, in ROW markets, we don't have a sales force. We work on a B2B model, so we work through partners. So we have no front-end team in the ROW markets. As regards to US, we have about 13 odd people in the US, and we will not be expanding that because it's not a sales force per se. We sell to the distributors and the trade channels. So
this success will continue.
Yeah.
Okay. Thank you very much.
Thank you. The next question is from the line of Saket Bansal from an individual investor. Please go ahead.
Hello. Yeah. I want to understand about this US growth, which is mainly led by volume, I guess, because if you see sartans price have been stabilized right now. So can we say we are gaining market share?
It's tough to answer that because it's so complicated. We have 80 products in the market. So it's typically we have price expansion as well as volume expansion. It's a combination of both. So I can't really.
What percentage of the growth would be price and volume led? Can you?
We don't discuss that.
Okay. Sir, can you tell me in million dollars terms how much it was for US? Would it be 70 odd?
Yeah, it's about 70, or I think about 75 or so, if I'm not mistaken.
Okay. So, can you at least share the detail, what would be the growth of new product line?
New product line?
Yeah.
We don't disclose that because it's very tough to say what new products are launched, and typically we take a long time to build market share.
Sir, we have invested a lot in injectables plants. Can we give a view like what can be the revenue from injectables, what we are thinking about injectable plants?